Good morning, good afternoon, good evening, depending on where you're listening from. Welcome back to the Musari Show. Before we get into it, please do hit the like and subscribe button if you are tuning in from YouTube. For those tuning in from Spotify, please be sure to drop a 5-star rating. Now, today, our guest is someone who would have not been a fan of mine had he met me 3 years ago when I was a crypto skeptic, and that's fortunately changed. He is the chief revenue officer of Salt Lending, which is a leading crypto backed lender in the United States, valued above $160 million. A major, massive player in the US digital economy. And I'm personally very excited to see something like this, booming in the economy as I've become quite a crypto enthusiast. So, ladies and gentlemen, please do join me in welcoming Hunter Albright. Hunter, thank you so much for joining us on the episode today.
Well, thank you for having me. It's a pleasure to be here.
Yes, absolutely. So as I alluded to earlier today, I was once a skeptic. My school of thought was that, crypto didn't have fundamentals that one could analyze before investing in. And over time, I've seen it mature. And here we are today. I think I checked last week, Bitcoin is was listed at number six with market cap of $2.1 trillion. So Bitcoin's market cap had surpassed silver last week. So, how was your journey of your first encounter with crypto, and how has your belief in it evolved over time to the point that you're an executive of a successful crypto backed lender in the US economy?
Yeah, no, it has been it's been quite the journey. Have spent the majority of my career in TradFi. I had run credit card and loan portfolios for global banks and had done a lot of work for both Visa and Mastercard internationally, and so was really familiar with the traditional unsecured lending space and the traditional payment space. And then in 2017, I started to learn more about Bitcoin. I got introduced to it, and actually, I'm a adjunct professor at the University of Colorado Boulder, and I got asked if I was interested in teaching the first Bitcoin and blockchain course at the university, mainly because of my background in algorithms and sort of systems engineering. And so I was excited to learn more about it, so jumped into teaching that course, and I haven't looked back ever since.
Wow, that's awesome. And how was the journey of how did it lead to you joining as an executive of a crypto backed lender, and how's that journey been? Because I've seen the business grow to eventual massive market cap, and after doing a bit of research, I've noticed that it's got quite a bit of clout across the United States, I must say.
Yeah, for me, it was really starting one. I did a deep dive in learning about the technology first. And that was really as I was teaching the course about Bitcoin and blockchain, I really became more comfortable, more confident in the underlying tech. And I think that's really been substantiated in terms of how secure the Bitcoin network in particular has been over the past sort of, 15 plus years, in terms of it just being stable, not being compromised in any way. And then as I got into that, I think one of the things that has excited me about Bitcoin and crypto in general is there's so many exciting rabbit holes to go down in terms of the technology, in terms of the philosophical beliefs and hopes of the community that is around it, but also in terms of the micro and macroeconomic factors. And so as I started to learn more about the potential of Bitcoin and the technology, that's on top of a background of really understanding TradFi and both the strengths and weaknesses. And I really became excited about Bitcoin as an asset to help promote financial literacy, to help people build wealth. In a lot of the conversations I have, I refer to Bitcoin as a technology and as an asset that is not only appreciating in value and becomes an investable asset for people or a really strong store of value. It is fundamentally bringing the strategies and tactics of the ultra wealthy to anybody.
Yes.
And I think that is super exciting. As I look at my students and a lot of sort of the younger generation of CEOs and company executives that I work with, one of the things that's really common, a lot of them are struggling to get on the housing ladder, especially here in the US,
Yes.
and where they're not able to then learn about long-term borrowing against an asset that has appreciating value.
Mm.
And I'm optimistic that Bitcoin can start to play that role in terms of one helping people build better financial skills, but more importantly, helping people build wealth in which they can have financial independence. They can build up, their own flexibility throughout their life to live the life that they want to live.
100%. No, that's interesting. So I'm still a trad fight professional, so I'm probably where you're at, like 5 or 10 years ago. And one of the question marks is around the security, because obviously we know that Bitcoin is encrypted, but on the other hand, we see, especially in the U.S. and China side, the evolution of quantum computing, and whenever I read information on the encryption, it kind of alludes to the amount of years it would take to like crack it in order to pretty much defy its security. So with the evolution of quantum computing and the data processing evolution, what would you say to a skeptic for their comfort in terms of the security and encryption of cryptocurrency and Bitcoin in general?
So on the quantum computing question and potential issue, one, I'm not an expert in quantum computing, but in terms of talking to a lot of the security experts, around Bitcoin, quantum computing would enable people to be able to process and have attacks on the Bitcoin network and the encryption in a way that is just exponentially different than where we are today. But I think the other thing that we have to remember is that that would also render all other security for governments, for banks, and individuals mute as well. And so the general, I think, sort of belief and hope for everybody is that there are security professionals that are working on building quantum proof encryption, quantum proof security and protection algorithms that are going to be needed regardless of the industry. And so that actually is a bigger problem than just Bitcoin in particular. And we anticipate it will be solved elsewhere
Yes.
in advance of it being needed or it being an overwhelming or existential threat to Bitcoin in particular.
Yes, that's quite that's really really encouraging answer. And onto like the hot question. So one of the hot topics in the United States at the moment is the public debt. That is something that has been a personal concern to me, given that the debt to GDP ratio is probably like the highest it's ever been, if my memory doesn't fail me. And on one hand, people were a bit nervous, especially during the peak of the whole tariff war around the bond yields. And then we had another very successful bond auction. I think it was a couple of weeks ago, and that kind of did impact the confidence in the dollar, right? And this also did translate to Bitcoin kind of appreciating quite a bit. So, how are you seeing things transpire, given that you're sitting with a portfolio of probably millions, if not tens of millions, or if not billions of crypto assets? And how have you seen the movements across the board, across different cryptocurrencies during this period of time? And how do you see that transpiring as time goes on?
Well, I think there's a couple different elements to that question and that topic. I think, people do look at Bitcoin as a asset class that has some is not necessarily completely correlated with the US dollar and with inflation. And allows people to put money into it as a hedge against either the devaluation or the slower growth of some of the other assets. And so, I think what we're seeing, and there is a big trend of people looking to hold Bitcoin in their portfolio as a reserve asset, one that has some ability to be uh, sort of differentiated and non-correlated to some of the other investment classes. And so, in the United States, I think we've got now over 15 different states that are looking at holding Bitcoin in their private reserve or state reserves. We've got more countries talking about it and investing in it in terms of holding it in their reserves. And and I believe we'll start to see more public and private companies start to hold that just as a sound investment strategy. Some will go all in, some won't, but having it in your mix of assets that provides you some resiliency, provides you some flexibility, and provides you some balance to maybe other assets or other markets that you might be invested in.
Yes. And I must admit that as a former skeptic, I think one of the turning points for me was, the Bitcoin conference in 2024 in Nashville, Tennessee. Actually, a friend of mine that used to live in Long Island has moved there, and he was actually at that conference. And that's when the announcement was made by the current administration prior to the elections that they did plan to make Bitcoin an official reserve asset in the US economy. So I remember also watching a video by Robert Kiyosaki where he kind of gave the example of the FTX case of what was missing in it from a due diligence perspective and what kind of due diligence crypto investors should do. So I think in that episode or that video, Kiyosaki, I believe, mentioned the financial reporting. He mentioned the governance. He mentioned the board, and he also mentioned the transparency in terms of the price reporting, something along the lines. I'm kind of paraphrasing.
Yep.
So, to someone who wants to invest in a cryptocurrency, what would be your guidelines in terms of the due diligence from your experience?
So there's a couple different elements to touch on here. One, let's start with just crypto back lending or Bitcoin back lending, and looking at companies in that space. And I would also include even exchanges and other companies that people are going to want to deal with or interact with in terms of the management and the use of their own digital assets. The the sort of real tragedy of FTX and BlockFi and Celsius has not tradition. Those were not caused by any sort of fundamental bug or issue with the underlying technology. It really comes down to fraud and mismanagement. And so, just like investing in a stock, people should do their due diligence on the strength of the business model, the strength of the management team, and the strength of the policies and security of the company in and of itself. And so that will hold true irrespective of whether you're vesting in a stock or you're vesting in a cryptocurrency. As people are working with companies in the space, I encourage them to look at how do the companies hold custody of their assets,
Mm.
and so that you can get comfortable with that. And I think that's important because any model of custody, even if you self custody your own Bitcoin, your own Ethereum, your own sort of stable coins or whatever digital assets you have, there still is risk, right? You are then responsible for your hardware wallet. You're responsible for maintaining your private keys in your software wallets. Uh, and so it's not that there is a model of custody that is risk free. They all just have different types of risks and also have different pros and cons. And so if you are, as an example, if you're self custodying your digital assets, well, then you're not really able to borrow against them because you have to partner with somebody to be able to leverage or access the value in that asset.
Yeah.
So if you then choose to do that, then I think you've touched on some of the right topics. Look at the stability of the company. How long have they been in business? I think that is a given the ups and downs of the cycle, that the longevity of the company is really important.
Yes.
Do some research on whatever financial information that they disclose to look at sort of the solvency and what you think is the resiliency of the company sort of going forward. You can look at how they provide, the customer options in terms of how easy is it to withdraw your collateral? What restrictions do they put on your collateral once you've deposited it? Are there other things that you're able to do or look at in terms of the reserves that the company has in terms of backing up the assets? So there is sort of a multidimensional review that people need to do. And I would call up the company and ask the company questions and get them to respond. It's a great way for people to learn more about the underlying technology at the same time of doing due diligence on the companies that they might be interested in working with.
Yes, absolutely. So I do understand that looking at your business model, you are a crypto-backed lender. So in other words, I do understand that the minimum threshold is $10,000, and you do have like an LTV, like loan to value threshold as well. So let's say I have $50,000 worth of Bitcoin, and within the acceptable LTV, I decide to borrow $20,000 on that, right?
Yep.
So, how would you mitigate the situation in the event that, let's say, there's a Bitcoin crash and the $50,000 worth depreciates to, let's say, 30 or even $25,000, and it's already not within the threshold? So, how would that be mitigated?
So there's a couple of different things to really call out with the example. So Salt Lending and almost all the lenders that are in the Bitcoin backed loan space or the crypto backed loan space are providing what are referred to as over collateralized loans. And that is where the value of your assets, your digital assets, are greater than the loan value that you're taking out.
Yeah,
Salt Lending lends up to a 70% LTV, which stands for loan to value ratio.
correct.
We also go down as low as you want to go down. We have customers that have loan to value ratios of less than 10%. And one of the things that you, as a borrower against your digital assets, can do is vary your LTV. So your LTV almost is a reflection of your risk profile. So the lower the LTV you have, it basically is an indication that you can absorb larger price drops in the market without the risk of being liquidated, or i.e., have your loan go into default where the loan provider would take over your crypto assets or your digital assets. So that's one thing to pay attention to, and that's really in your control. All the lenders will give people margin calls. So if the price does drop, you get alerts to be able to add additional collateral into your collateral wallet
Yeah,
in order to bring your loan back into good standing. The other thing to check on is basically the default point with each of your lenders. So there are lenders out there that will essentially default your loan and take over your asset, your digital assets, at an LTV as low as 70%. A number of them are at 80%.
hmm,
At Salt Lending, we have a liquidation point or a default point at just under 92% LTV.
okay,
So, really giving people as much time and flexibility to be able to manage their loan as they see fit. The other new feature that we have come out with recently, and we hope and we see more providers coming out with similar technology, is we allow people to opt into what is referred to as Salt Shield. And Salt Shield allows for you to essentially enroll in a fixed fee program where we guarantee that you won't have a liquidation and you won't have a taxable event regardless of the market drop.
yeah,
So much of what we are doing at Salt and generally starting to think about and engage with people on in the ecosystem is how do we protect your collateral?
yeah,
We are in the business. Our business model is lending money against digital assets.
correct.
And while there are businesses out there that bank on acquiring Bitcoin, acquiring other digital assets through default. That's not our business model. We have really prided ourselves in being very customer centric and leading on sort of features and functions that allow customers to have flexibility in terms of managing in their assets. And so we continue to try to do that so that you ultimately have control of your cryptocurrency, your Bitcoin, are able to withdraw excess collateral if the price goes up, and you're ultimately able, guaranteed, in fact, to be able to get your Bitcoin back, your digital assets back once you repay your loan.
Okay. So would you also consider, let's say, stablecoin as part of the asset class that you use for collateral? I ask that because regardless of whether you're pro the current administration or anti the current administration, we would agree that there will be a bit of up and down movement for different cryptocurrencies. So would stablecoin also be accommodated as collateral?
Absolutely, and Salt is I think the only lender in the market right now that allows for you to hold multiple assets in your collateral wallet. And we do see a lot of customers add stable coins into their total collateral pool or portfolio to help take out some of that volatility of their LTV and of the price fluctuations. And so that is another way of managing your asset portfolio based on your own risk profile.
Okay, great. So, back to the question I made earlier around, how people are a bit nervous about the dollar, and you know, I'm pretty sure you have noticed in the last couple of years, especially the last 4 to 5 years, in terms of the future of the dollar's dominance, some people have been pointing to a basket of different currencies. Some have been pointing especially to BRICS currencies, and some have also been pointing to Bitcoin and cryptocurrencies as possibly replacing the dollar. Does Salt Lending have like an official view or official stance on that, or in other words, let's say for PR from a PR perspective, what would be the response to a question like that? Should the press come with such a question?
Well, I mean, I think Bitcoin and Ethereum right now are the two primary digital assets and stablecoin that we lend against, both of which are viewed as hedges against any fiat currency as they exist outside sort of the outside sort of government sort of publishing of sort of additional volume of the tokens of the digital assets. And so, I think historically, and you referenced it earlier, that money does seem to flow into Bitcoin in particular when interest rates are going up, when there's unease in a given country, to act as a safe haven, to act as a hedge against the inflation of a domestic currency. And so we act as a licensed lender in the United States and internationally to lend against that asset class. And we believe in Bitcoin. We're sort of, we are bullish on it. And we sort of believe it is a real strong asset that provides people flexibility and value on a long term basis. And so I would agree with you. I mean, I do think that Bitcoin offers a hedge against inflation. It offers an alternative asset to include in your mix of choice for your own portfolio. And we have customers all over the map. Some of them have a little bit, some of them are all in, but all love the fact that they have more control, more certainty in terms of investing in what is a scarce asset based on the fact that there's only going to be 21 million of them ever mined.
Yes, and also another interesting question that could potentially be controversial. Around the concerns of the public debt, and obviously from the news circles nowadays, it's quite evident that the strategy around cost cutting is one where there are a lot of question marks around. And obviously there's concerns around spending and a bit of skepticism on whether there is a feasible strategy to cut down on spending. And then we're hearing the news of a bill with possible tax cuts that can add to that deficit, while some do argue that those tax cuts could stimulate more economic growth. Um, would you say that, from a government perspective, adoption of Bitcoin as a reserve asset could be a strategy for paying off the public debt? I think I have heard that one of the South American countries, I'll have to fact check that, has adopted something like that. Would you see a possibility of that in the future?
Yeah, so 2 points there. So on the country that you're referring to, so El Salvador has adopted Bitcoin as a dual national currency with the US dollar.
Yeah.
And you are seeing sort of countries start to play around with, how might we use the Bitcoin in particular as a national currency. Now, regarding the ability to hedge or make gains against a deficit, and the use of Bitcoin in a reserve strategy, I do think that that has potential for individuals, for companies, for states, as well as governments. And the core concept there is that the appreciation of the asset will outpace the growth of the deficit,
Yeah. Correct.
the growth of the debt. And
Yeah.
so, as we think about it as an individual asset or an individual reserve, there's a lot of lessons all of us can take away to better potentially understand how governments work, how sort of the central banks work, and what that, how we can manage our own money, but also gain insights and financial literacy around those topics as well. So let me give just a simple example. So if you imagine you have one Bitcoin and it's worth $100,000, the I would say the prevailing borrowing rates in the market today range anywhere from 10 to 16% APR on crypto back loans,
Yes.
over collateralized loans. So let's just keep the math simple. Say it's $10,000 or 10% APR. So borrowing $100,000 loan would cost you $10,000. Now, in the traditional unsecured lending space, right? People are oftentimes borrowing on a credit card or a loan to facilitate how they want to live their life, to take a vacation, to buy sort of an experience, to buy maybe a sort of a nice item that they want. And then it could be also to pay for college, to put a down payment on a home. But in many respects, they have been taking an advance about their income to close gaps or to give themselves more disposable income. Now, one of the things that we see happening with the over collateralized loans in the crypto space is people are starting to employ more of the strategies and tactics of the ultra wealthy with these type of assets. So they're borrowing against an asset and they're oftentimes using it to take advantage of other opportunities, that it might be other investment opportunities or even to supplement their income stream. But the key thing here is that they might be paying 10% on the APR of the loan, where
Hmm.
the asset class is generally projected to grow at 30% more a year.
Yeah.
So on a net position, even if they paid 10% and the Bitcoin in particular only grew at 30%, they still have they have a 20% gain on the effective cash flow of their portfolio, but they've also been able to do it while avoiding capital gains taxes, which has been a big strategy of the ultra wealthy. So by borrowing against an asset, you don't have any taxable event in that transaction. And that is a real unlock in terms of being, more savvy and more strategic with your assets, and something that collateralized lending allows compared to unsecured lending.
So, in other words, your strategy is quite a win-win both for the borrower and for the lender because the lender makes real returns on the dollar, given inflation, given the cost of the dollar, and the borrower makes returns because of the asset value that's appreciating. Would that
That
be? Yeah.
that's correct. Yeah, I mean,
Okay.
if you it's learning to look at borrowing on a strategic lens about, hey, I can borrow this money, and one, can I also put that the money that I'm borrowing to work in another yield generating or appreciating scenario, but also knowing that fundamentally, if you're starting off by borrowing against your digital asset, it has a projected growth rate, and so as long as your anticipated net position is positive, then the borrowing is a strategic gain as opposed to a strategic withdrawal against your overall net worth.
Okay, that's awesome. So to those who are listening, and let's say they want to learn more about salt lending, or they're holding a bunch of crypto assets and they're looking for wise strategy to make some returns while also leveraging on healthy LTV. How could they find information on salt lending? How could they find you guys, and what would be the process for that?
Yeah, so they can find out more information at saltlending.com. And then in addition, I often speak about and write about these topics on LinkedIn and X, where they can find me at sort of Hunter Albright. And the one thing I would say is it's really pretty straightforward. If at Salt, you can go. set up a Salt user account. Once you have a user account, you can apply. You can use our calculator to understand more about how the loans work. You can apply for a loan through the calculator. And then once you deposit your collateral, you can take out a loan. And I really do encourage people to start with a small loan and even just experiment to learn about the platforms that you're interested in, as well as just continuing to help build up your own financial skills so that as you want to borrow more amounts and larger amounts over time, you are very comfortable with how to manage that financial tool.
Okay, that's great. No, so Hunter, thank you so much for joining us. It's really been insightful for me. I just consider myself a student. I'm going to continue to pay attention to what's the opposite of trade fi again? I'm used to the trade fi term.
Oh, DeFi, TradFi, and DeFi.
Yeah, DeFi. So I've been studying DeFi. I must admit that when I started studying DeFi, I started as a skeptic. I was skeptical of it, but I told myself, okay, let me understand it better and at least develop a position from a place of information. So thank you so much. This has really been informative, and hopefully, I'll be one of the people on your platform as well.
Well, that would be great. We'd love to have you and greatly appreciate the invitation to be on the show.
Sure. Thank you so much. Take care.
Thank you.
Cheers.